Y cuando son las 2 de la tarde seguimos en directo en Bineo Real Estate y ahora vamos a profundizar en la industria del Impact Investment. Son las inversiones llevadas a cabo a través de las empresas que de forma directa o a través de los intermediarios tienen una intención directa de generar un impacto social y medioambiental junto con un retorno financiero. Pues sobre estas cuestiones vamos a profundizar pues en este panel moderado por Javier Faus, que es presidente del Cercle de Economía y también presidente de Meridia Capital. Muy buenas tardes, le tenemos aquí. Va a ser él, como decía, el que modere todo este panel, el que vamos a profundizar en este tipo de inversiones que precisamente buscan eso, ese impacto, ese retorno financiero. Así que les dejo con ellos. Va a ser Javier Faus la persona encargada de moderar y también de presentar a nuestros siguientes invitados.
Pues muchísimas gracias. Muy buenas tardes, muy buena tarde, good afternoon. Es un placer estar con todos vosotros. Antes que nada, felicitar al Consorcio de la Zona Franca por haber creado este evento. Yo creo que es fantástico, magnífico que en este momento de COVID hayan estas iniciativas y, por tanto, muchas felicidades al Consorcio. Pasaré al inglés porque tenemos dos invitados que están en la pantalla en versión inglesa, que me han pedido que lo hagamos todo en inglés, con lo cual we will pass to English, Josin and Ricardo, so we will all understand each other. Well, thank you so much again for all the guests. My name is Javier Faus. I am the president of Meridia Capital. Meridia Capital is an alternative investment firm. We invest in real estate, but we also invest in private equity. We also invest in venture capital. We've raised over $1 billion in equity in the last few years, and impact investment has been one of the drivers in the last years of our activity. What is impact investment? It's a big question mark in the industry. Is it just greenwashing our financial returns? Is it truly just an NGO? Are we donating money? Or is it an industry that tries to match the financial returns with also social returns? Is it just to comply with the 2030 agenda and the SDGs, the 17 goals of the United Nations, or is it much more than that? How is it measured, the impact investment? Where are the deals in the real estate industry that we can look in impact investment? For all of that, we're going to discuss today for the next hour. Impact investment, as an introduction, is truly an industry that tries to make good, to do good, by investing money with also aiming at financial returns. So it is not a greenwashing, it is not only a financial return, and it is not only to comply with the 2030 agenda. It is much more than that. In order to talk about all of that, I have the big pleasure to have four fantastic guests with me today from all different spectrum of the industry, real estate investors, consultants, institutions, etc. So I will introduce each one of you, and I will ask for yourself to introduce yourself, of who you are, where you work for, and to make a short introduction of 2-3 minutes, and then we'll go on with the panel. So I will start with you, Josin. Josin Peak, head of EMEA for GRESB. Very welcome, Josie, and if you can please introduce yourself.
Thank you very much, Javier. Yeah, it's wonderful to be here and to talk to you, even though I'm remote, not in Barcelona. GRESB, I'm the head of EMEA of GRESB, and GRESB is really a beautiful example of an industry coming together under the investors who wanted better ESG data. We bring together the global real estate industry, the ESG data reported of currently almost 5 trillion of assets globally are reporting to GRESB, which is 96,000 assets. And this massive database really allows us to do impact investing, to do sustainable investing, but to have an objective data source screening and checking and validating that what the managers and what the investors are saying is actually true. So I'm a big believer that data is one of the big underpinnings of this transition towards a more equal and a more sustainable world. And GRESB is a good example of that.
Thank you so much. We'll have the opportunity to talk to you later about how measurement works. How can we truly measure the social impact of our investments? No? I have on my left David Martinez. David is the head of the IMU, the Instituto Municipal de Urbanisme of Barcelona, of the Municipality of Barcelona. Welcome. If you can introduce yourself.
Thank you very much. Thank you for the organization. Thank you, Javier. The Municipal Institute of Urbanism is a public company from the Barcelona City Council that takes part in the urban transformation of specific areas that are previously defined in the urban planning. Specifically, when there is a private initiative in developing these areas, we take part in the reparceling process. We accompany the private investors in the reparceling process. When the initiative is public, we also take part in the urbanization of the public spaces and the streets. So we collect money from private, money from the city council, and we urbanize those public spaces. And very recently, we have opened a new line of action called Urban Regeneration Areas that deals with the retrofitting of housing estates regarding the rehabilitation of houses and also intervening in the urban environment.
Thanks so much. Very, very interesting. Since we have spoken with David for the last few years, at Merida Capital, one of our goals is goal number 11 of the 2030 agenda, which talks about communities and how can we real estate investors and developers improve communities. I now introduce Ricardo Abello, the director for Franklin Templeton. Welcome, Ricardo, and thank you for being with us.
Hi, Javier. Thank you very much, and to the organizer for inviting us and giving visibility to this very important topic of impact investment. So as you mentioned, I'm a director of Franklin Real Asset Advisor, which is the real estate platform of Franklin. Franklin is a large US asset manager with over $1.4 trillion under asset management. So we are, I think, the 6th largest globally. I manage the investment and the asset management team for Europe. I joined the company about 4 years ago and really set up the direct real estate practice. We are active in both value add and core investment. I think of a particular importance for this panel would be our social infrastructure fund, which is what we know as the first truly impact fund across Europe that we launched a couple of years ago that invests in healthcare, education, necessity housing, civic, and emergency asset. For this particular fund, we have developed a bespoke impact framework that hopefully we're going to have time to talk during the panel.
Thanks so much, Ricardo. It's a true pleasure to have Ricardo. Franklin Templeton is one of the big investment houses worldwide, and the fact that private money is investing and putting its trust into impact investment is extremely important. We'll talk also later about the importance of private capital. Private capital will make 2/3 of the investment on impact investment in the next 10 years, 2/3. Public money will only be able to cope with 1/3. This means administrations, public policies, public municipalities will have to learn to partner with the private capital. And that will be also a very important topic that I will want to discuss with you later. And finally, I have Xavier Way, director at CBRE Barcelona, also to my right. Welcome, Xavier.
Thank you, Javier. Primero también me gustaría agradecer a BNU la iniciativa que ha tenido, y yo creo que es un ejemplo muy claro de cómo una situación tan complicada como la que tenemos es capaz de reinventarse y probablemente incluso mejorar lo que ya teníamos. Enhorabuena. I'm Xavier Well. I'm basically the Barcelona Managing Director at CBRE. Probably most of you know who we are, but to make it short, we are the worldwide leaders in real estate services. We have more than 100,000 employees around the world. We have presence in more than 100 countries. And just to give you a figure, last year our revenue was $29.3 billion. So yeah, we actually are a pretty big company, but we have a mantra which says that think global and act locally. And maybe later maybe I have the opportunity to share with you some examples of how do we implement this mantra in our company.
Fantastic. Thank you, Xavier. Now we have about 30 minutes of debate with us, dialogue. You can interrupt me anytime, both Jocelyn and Ricardo and yourselves. And then after we have 10 minutes for Q&A from the public that you can access. I'm being told you can access directly, you can put your questions, and we will read them from here, so we will answer any questions that you can put us on the screen. I will start the debate with you, Jocelyn, ¿no? About the measurements. ¿Cómo medimos este impacto social, no? How is this impact measured? Because at the end, if we're going to invest money and ask for money from institutions to do good, how can we measure that we are truly doing good?
Yeah, great, Javier. The thing is, of course, you need to know what you need to measure. And the difference, to be clear, GRESB is a sustainability data benchmarker. So the sustainability currently is on environmental metrics, which are very well defined by now. So that's in a way the easy part. The social side is much more complex, and I'd argue that we're still, as a global community, we are still figuring out what is actually, what makes the social impact. So currently it's very much about, are the employees happy and doing well? Are the tenants happy and doing well? Are the other stakeholders happy and doing well? That's the social side of things. And then the third part, which is also incredibly important, is the governance. So how do you make sure, do you have the right policies? Do you have the right attention towards these issues? Because otherwise what you see is if you don't have this correctly embedded in your company, a person can leave, and all of a sudden the whole impact can go away. So having a good governance framework is incredibly important for these items. Now, with impact, of course, it comes down to the single variable that you're targeting. But with impact investing, I would keep very much in mind that there's also the other part. You cannot just focus on, say, affordable housing, but treat your employees very badly or have a very big gender pay gap. So it's still important to keep the overall assessment of your sustainability data in order. And that goes very much with the EU idea of do no significant harm. So you can have an impact, but you still need to have a checklist to make sure that you're not doing bad stuff on the side.
Thanks so much, Jocelyn. I would like to ask you, Ricardo, what real estate industry can really bring to the impact investment world, no? Because when we think about impact investment on real estate, the only thing that comes to our mind is affordable housing. No, that's the first thing that comes to our mind. No, vivienda asequible, that we say in Spanish. Affordable housing. What else is there on the real estate world that you can enlighten us on impact investment on real estate?
Yeah, thanks, Javier, for this question. I think if I just may do a kind of short intro, for the last few years, impact investment has really been seen as a concessionary, and so as an investment strategy that focuses on some market return in order to generate this social impact. That was partially due because the first investor really come from family offices and trust and foundation endowments that had inverted commas too much wealth, so they can decide how to utilize it for honorable causes. But really, I think what we're talking here and what we frankly are really advocate is to find this win-win situation where an impact return can be achieved together with a financial return without compromising. And that's really the key to unlock the volume of private capital that you mentioned before, which sit with pension fund, sit with insurance and other institutional investors across Europe that can really make a meaningful impact in terms of volume of change. So when we talk about impact investment in Franklin, we talk about theory of change. So you have to set up what is the challenge that you're trying to tackle by your investment, what are your contributions, and then measure your outcome. So different from other ESG framework where you're more rated passively on what you're doing and you have a benchmark. Here you need to be really intentional on what you're doing. So for example, in Franklin, we have identified a social infrastructure space that was as a space where we can produce impact. So it goes beyond affordable housing, includes healthcare, includes education, includes any real building that provides services to communities. This is a sector that the EU identified in a paper back in 2018 as being underinvested. So clearly an investment opportunity for private capital. There is 150 billion per annum gap in the sector across Europe, and it's growing because the public balance sheet cannot invest more, even given COVID and where we are. So there is a huge opportunity. So it's not just affordable. It should not be seen as niche. We really need to produce a change in mindset, if you want, within the real estate industry to embrace impact and really seek those win-win opportunities to provide a financial return and impact at the same time.
Well, thanks, Ricardo. I would like to go later, after I hear also more David and Xavier, to specific examples. I think our audience would like to see, tell me one deal of impact investment. What have you done? Have you bought a hospital, a library? What are you exactly doing on the space? I think later I would like to return to that, okay? On Xavier, tell me a bit more about CBRE. Are you opening a specific department to serve impact investment or not? What are the trends that you see on the market?
Well, I mean, I think that if we talk about CBRE, we should talk about cities. Actually, we think that it's very important to point out that nowadays cities are going to lead the world. I think it's a great change of what we are seeing in this sense. So what we think is impact investment is absolutely crucial for the investors, especially if they want to have a positive impact in each city. Let me give you an example, Javier. Just for instance, at this moment, we are just conducting a plan in the CBD of Barcelona. We are talking about 5,000 square meters of public surface, public space, and what we want, and it's no use nor activity in that area. So what we want is to transform this area because we want to take it, open it up to the city again. So basically, this investment is being undertaken by several private investors who are owning the surrounding buildings. So basically, the impact of this invest will have a great benefit on the city, on citizens, on the tenants of their buildings, and the value of the assets, which is extremely important. So that's what I think, that impact investment is so important for cities, for investors, if they want to add value to the cities. And they have to see beyond the pure financial interest. And it's something that definitely in CBRE we are trying to promote this kind of impact investment. Because the thing is that we want the investors to see beyond this specific financial benefit. And what is key for us is that they have to see that if they invest in the surroundings of their assets, they will have a benefit, but also the society will have a benefit too.
Thanks so much. I think this brings me great to a discussion and conversation with our friend here, David, from the Municipality of Barcelona. We've been discussing with David for many, many years, how can we contribute better to communities, no? We don't think cities, as Xavier said, are the key factor, but we are believers on communities, not so much on brands. We sometimes talk about the brand Barcelona, no? La marca Barcelona. We are more fans of the community, because cities have to create communities that are livable for everybody, no? And that everybody can feel at home in that community. David has great experience. He's the director, as he said, of the IMU. But also, I'm interested also in your experience in 22@. He's a great expert of 22@, probably one of the main experts in Spain on the 22@ district, which is a huge success story in the city. How are you seeing the transformation of the district, the public-private partnerships? how can we invest on impact investment in this city and in this district? And is the city prepared to accept this private partnership or not?
Okay. It's true that 22@ Innovation District, as an innovation district, and as the first innovation district launched in the world, has some lessons that we can learn from. For example, and that has a lot to do with the 2030 agenda, on the other hand. For example, every private investment, every private movement that is made in 22@ pays some money for infrastructure. This infrastructure is not done piece by piece. Our institution collects this money, and by collecting all the money, we are able to implement an infrastructure plan that is the only way to reach large-scale solutions regarding what environment is demanding us. For example, we are able to deploy district heating and cooling. So every new building in 22@ is connected to a net, to a grid that takes benefit from burning waste near the river, and that can only be made by an instrument that is able to get the money from the privates, but implemented by the public sector. That is an example of PPP, we would say. Or another example, the urban sustainable drainage system that we are implementing in the whole district is made thanks to this money that we collect from the privates. If we are facing the 2030 agenda, probably large-scale sustainable solutions must be taken into this kind of cooperation. Another example, we have public properties in 22@ resulting from reparceling processes. In some cases, we obtain heritage buildings that are very hard to refurbish, and there is no public money for doing that. One example is the new innovation center that we opened 2 years ago in Calalier, one of these old factories. This was done thanks to a deal with a big technological company, a North American technological company, that paid 40% of the budget. So
we can say it. It's Cisco,
it's Cisco,
and we are very grateful for Cisco.
And we thank a lot Cisco to invest in this city. And this was a kind of paying in advance a rent for 15 years. So they have the right to be there for 15 years, and this will be an opportunity also to launch an ecosystem regarding smart cities in this place. But it's important to have these PPP collaboration opportunities, because otherwise the public sector cannot afford for itself the refurbishing of every protected heritage building in 22. That are two examples of that.
It's a question for all of you. I throw it to the table, and maybe Ricardo, you can answer first. But for all of you, why don't you give me just one very simple example of investment in impact that has an impact on the society, on real estate, so that our audience can understand better beyond the big issues of impact. Just one example that we can understand a bit better. How can we contribute to do good?
Yes, so I'll take the opportunity to talk about one of the investments in our social infrastructure fund. So this is an hospital that we have acquired last summer in 2019. Sits in Lido, which for people that don't know is Italy, is the island in front of Venice, between the lagoon and the open sea, effectively. So why would this classify as an impact investment? Because buying an hospital as such is not impact investment. You know, if you're buying an hospital and there are 10 other hospitals in the city that are doing exactly the same, are you actually changing or doing anything meaningful to the community? Probably not, because people can go into another hospital. So one of the things that we analyze for this asset in particular, for our theory of change, okay, what is the challenge? The challenge here is that an hospital that's be owned and occupied by a religious order that fell behind in terms of excellence in running healthcare system is the only hospital on the island. So this is facing closure because it's not making money, and the religious order has to sell. It's an amazing piece of real estate, can be easily reconverted into a hotel or another commercial use. So how we step in and create what we call our first contribution, so aligning long-term capital. So we come in with our social infrastructure fund. Our interest is to create a long-term lease contract where we can inflation link, where we can enjoy our income. We come in, we acquire the real estate, and lease back the hospital and the care home to 2 new operators, which are also acquiring the 2 businesses that are basically non-performing. So we create with our long-term capital, the ecosystem that our colleague was talking about in Barcelona, you created in Barcelona as well, where the healthcare system can thrive. So we save an hospital from closing down. We keep high-skilled labor there, people that work and contribute to the local economy. So that's really our first contribution in terms of impact investment, aligning the interest of the community, of the tenant, of ourselves, creating an institutional ownership of that asset. Second, and third together, what we call function enhancement and environmental upgrade. So the function enhancement for us is really to make the real estate work harder. It's quite, in this kind of shared economy or economy 2.0 where everything is shared. As you probably know, there are a lot of downtime period in the building. So we want the building to work harder, to work in the downtime, so you can partially offset. And in this case, we focus on the research part of the hospital, where it was basically at the bottom of the ranking in Italy for quality of research. A year later, thanks to the capex that was invested at acquisition, one of the top researchers worldwide on brain diseases was able to come back to Italy, open a new research team. This year is already in the top 13 research center in Italy, which means new grants. There are 6 new positions open for senior data scientists that will further contribute to the growth of this research. So that's how we calculate impact. And of course, by modernizing the hospital, we're also improving the environmental upgrades. And then fourth piece is what we call purpose-driven development, so adding to the scope what is needed. So thanks to this investment, we're in discussion with the Regione Veneto, which is the region, local region, to develop on this side where we have a lot of excess land, a new end-of-life facility to really create a world-class facility for people that are spending there the last days, for people that look after them, and for the families that are actually going to be sitting beside these people in the last days of their life. And then finally, stakeholder partnerships. So we always had at heart the people that are actually living in the hospital, and what could we do to improve their life, if you want, on a daily basis. So we set up a conversation with the municipality of Venice, because to get to Lido, most people that actually work or visit people in Lido, if they take public transport, they have to go to Venice Historical City Center, and that takes you 1 hour and 40 minutes. And so by talking with the municipality and demonstrating the demand and the need for a direct link from the mainland, the Veneto, to the Lido, we're pleased to know that from the beginning of September this year, there's a direct transport that links you from the mainland to Lido. So people that work there, instead of taking 1 hour, 40 minutes, are now around 40 minutes commute. And that's really what is the impact. Now, we haven't measured, well, we are measuring it, and we only report annually. So the actual data in terms of the income and the local economy will be published in our next year impact report. But these are really our 5 pillars of contribution in each investment.
Thanks so much, Ricardo. If any of you have one example that can enlighten us, will be great. Justin, for example, if you have, you've measured a lot of probably impact investment. If you have one that you have in mind that you would like to share with us, would be great.
Well, maybe I can. I mean, it is more of a collective KPI, I think. But what we're seeing right now is, of course, we have been measuring greenhouse gas emissions since the start. But now we have with the CREM, the Carbon Risk Real Estate Monitor, which is 5 universities, European universities, coming together and really making pathways per subsector, per real estate subsector, per country. We have a clear overview of the carbon reduction necessary on a square meter, per year emission line. And what we're seeing, that this is becoming very much a collective KPI for the real estate industry to really measure, on the one hand, on the negative side, how much of their assets currently will be stranded when, so really a stranded asset risk monitor. But on the other hand, also a very clear incentive to reduce carbon emissions for the real estate sector, which is, I would say, a very important collective KPI that is now coming to the fore.
Thanks so much. I would like to open a bit of a debate here with my Spanish and Barcelona colleagues about our own issues in this city and in our country. No? We find out when we try to do impact investment in Barcelona, for example, and in Spain, that is more complicated than in other countries of Europe. We find there is a bit of hesitation from the public administration to accept private investment, as if they were privatizing what should be for the benefit of the public. It does not happen in other European countries that are very, very progressive. We find it difficult here to progress on that area. We have a lot of necessities with the pandemic, with the social inequalities, and there is money out there in the market ready to invest in libraries, in health centers, what we call in Spanish CAPs, which are primary health facilities, and they are ready to invest in that. Of course, leasing it back to the administration for 50, 100 years, or whatever time it's necessary for both parties. Why do you think it's becoming so difficult in Spain? Because there are legal constraints, there are political constraints. What is your view? What are your both views?
Okay, I think there are some general aspects. One of them is that we have Latin regulations. We all come from the Latins and the Roman legal regulations, and that gives the sense of the property is very strong, and the different domains, the public domain and the private domains, are clearly differentiated in our legal body, let's say. But nevertheless, there are some opportunities and recognized by the legal instruments to make deals between public and the private spheres. So we have to explore even more these windows that are open for that, not only regarding the property instruments or deals that are linked to the property, but also a collaboration regarding financial vehicles, because we have a lot of challenges. For example, and I come back to the thing that we are trying to start now in Barcelona, which are the urban regeneration areas. In Barcelona, we have 40,000 buildings that were built between 1940 and 1980. That means in the fast period with let's say poor materials, and before the first thermal regulation in Spain. So those 40,000 buildings are energy inefficient. Some of them have structural problems. Many of them are not accessible, and probably they have problems of salubrity, of controlling the water, let's say. So this will be a major challenge in our city if these areas are not to be definitely obsolete. So there is room for that. In the public sector can invest. We are going to invest in the next years in how to retrofit these urban areas, but this is a way to open the door for that. We need the private sector. We need the private finance sector to make a scale up in this huge problem that we will have in the city that we have now. So I think it is evident that there is an environmental impact, a positive environmental impact in retrofitting these areas, a positive social impact because we are talking of areas with a socioeconomic characteristics not very good, and we think there is room for a certain financial return in this kind of potential public-private vehicles that we can imagine.
Yeah, I think in that sense, the kind of impact investment that we propose to our investors, as I said, is basically the public surrounders of some private buildings. I have to say that in this sense, we see the public entities a bit more open to reaching agreements. It's true that the public entities, they don't invest in that areas, even though it's public areas, and the money comes from the investor, the private investor, so maybe that helps. It helps to reach an agreement because they don't have to use a budget or public budget. But I think that when we try to reach an agreement for that surrounders, I think that it's, I don't want to say easy, but we see very open the public entities because the win-win result is very clear. I mean, and in the example that I mentioned before is we're talking about 5,000 square meters in the CBD of Barcelona without no use, no activity. So when we went to the city hall and said, hey, this important area, the owners of the buildings around this area are going to pay to transform this public area into parks, to get life again to that area. When we go with this plan, we see that the public entities are much more open to listen and to reach agreements. So that's what we can say. Yeah.
Ricardo, what are you facing in other European countries? Can you enter into a plot in Milano or in London, a public plot, and do like a 50-year lease or 75-year lease and build a hospital or a library?
It's not so straightforward. I would say most public balance sheet have tremendous problems. So first of all, they expect you to come in and resolve all the problem, which is quite difficult because the volume of scale. You mentioned Milan municipality, and we discussed with them, for example, their school, and we're talking about billions of euro school just in that municipality. So the scale for the need for investment is huge. As the colleague was rightly saying before, there is a problem of perception in Roman law countries. There is also a problem in the way the fiscal budget works, because transforming an asset into a long-term liabilities by entering in a long lease contract is not permitted in certain countries, or the yield is much higher than just issuing bonds effectively. So that also has to be tackled. But I think, long story short, I think is the function of the central government to really create this ecosystem to favor the private investment. And we, from the private capital side of things, we need to be authentic and transparent, because there has been a lot of issues in the past where there has been situation with sales and leaseback where the trust between the private and the public got lost, and it's very difficult to win it back. I can say that vehicle like ours with our impact framework, and if you want the guarantee that we're going to be a responsible lender for the long term, open up a lot of opportunities, and we hope not to be the only one given the scale of need in this sector. Other areas in the Nordics, the UK, they're way more commercial. They understand asset management much better. It's easier to say municipality, you move your town hall from the city center, unlock that site and move it to another location that is now a brownfield for you, non-income producing, and you regenerate that area by anchoring that real estate development with the public tenancy and freeing up land value in the city center for private use. London has done it with the town hall. When you move to more London, south of the London River, seems something crazy. In the late 90s, beginning of 2000, they've regenerating all the land. They created a lot of value for the municipality itself. But until the municipality wants to sit in their city center location, anchored to high land value and sitting on a high opportunity cost, and we see in some of the municipality we talked to where they have 80,000-90,000 euro equivalent rent missed because they use the real estate so inefficiently in such high land value use, then it's going to be very, very difficult to create investment opportunities.
Well, thank you. They tell me here from the staff, we have 5 minutes left, so we will use these 5 minutes to make any final remarks that you want. I will put just also some questions, starting from you, Ricardo, and this is the last one for you. One question: who are your investors? I mean, why are institutions investing in impact investment? Are they looking for a bit less returns, financial returns, than in normal investments? Because from a public perspective, someone could question social impact should also be in accepting a bit less return than in other types of investment. No, that's also part of the equation. Is that so or not so much?
No, our investors are really financially focused because they have fiduciary duties, so they cannot really go beyond. They are pension fund, insurance. These are people that will retire on this capital, or you have damages paid out to life insurance, so you cannot be concessionary by nature. Again, we won't achieve scale if we are concessionary in what we do in the impact space to the point where we're going to be meaningful. They are interested because they see as a minimum this as a very positive additional risk framework, if you want. So because you're going through all this brain damage of trying to create impact, you align yourself with winning tenants and winning regeneration project. You know, and an example of that, for example, in our portfolio of healthcare, we had no COVID cases, you know, throughout the pandemic because the quality of our tenants and because of the alignment of interest, if you want, was higher than the average. So at least they look at it as a aligned. Other have board that give them specific objective to align with the 2030 agenda, with the United Nations Social Development Goals that our fund also tackles. So it's a mix, but no below market return.
No,
that's very
thank
clear.
you. This is very, very important because sometimes when we go to the market, people think that impact investment should be for free, that there should be no return, and it's very important to let it know here to the audience and the public that impact investment is not a donation. That's, I think, so that's very important. Xavier, your last remarks, are you getting more clients coming to you interested in investing in the space?
Absolutely. And I think that one of the main reasons is that behind many funds, not impact investment funds, but funds in general, we should bear in mind that there are regular people. I mean, the savings or pensions of teachers, of doctors, and what we have seen over the last 2-3 years is a change of mentality. I mean, they of course want a return or a financial or economic return of their money, but they start to demand something else. They want to know that the impact of their money has something to bring positive to the society. So I think it's very important because it's in a very initial stage. But I think that's what I think that impact investment is here to stay, because it comes from the bottom to up. At least is what we are seeing, or what the regular investors are telling us. This change in the mentality of the savings or the people who is behind these funds.
And Justin, I think it all comes again to how we measure, no? Cómo medimos este impacto, how we measure this impact. Because if we are going to invest our own money, or we're going to ask our institutions to invest money in this space, how can we assure them that at the end we're doing good?
Well, you definitely need to measure it, that's for sure, and it needs to be, you know, independently measured. It needs to be validated. You need to do a couple of you know, make sure that that data is right. What I do find important is to say is that, and as it was mentioned already a couple of times, it is, in the end, it is the good relationships that make the positive impact. So the relationship is there first, but we all know that a relationship with good data flowing through it is even stronger than a relationship without any data. So it's really building, and I thought it was incredibly positive to hear the examples of PPP coming, the public sector coming together with the private sector and doing a lot of good. And what we're seeing, and I can really, it was just said, the institutional investors are now working on a double mandate. So they have the fiduciary duty to make sure that there's enough money for their old age pensioners in 20 years, but they also have a fiduciary duty to make sure that the world is there for them to pay their pensions in 20 years' time. Okay. So we're coming into a very interesting time whereby the SDGs are really becoming a collective business plan for business to rally behind and make a good world in 10 years, or let it, if we don't, we really don't know what the world will look like. So well, it's becoming very, very interesting, this
Thanks so much. They are telling me we have only 1 minute. We have one question, and then I would like to ask David just one last question for 30 seconds. Pregunta: ¿puede actuar la inversión privada como aceleradora del desarrollo de los suelos de titularidad pública para que puedan tener una rentabilidad social sin que comporte la pérdida de la propiedad pública? Es decir, derechos de superficie, me imagino que se está refiriendo la pregunta de José María Fontanals, derechos de superficie, derechos de usufructo, concesiones, etc. Pues te la paso a ti. 30 segundos porque te quiero hacer la última pregunta. Venga. La puedes contestar en castellano.
Castellano si para José María. Sí. Totalmente. No solo es así, no solo nuestra legislación permite esa financiación privada en diferentes fórmulas, sino que el reto que se nos plantea, como decía en varios temas, es el escalado de las cuestiones. O sea, la inversión pública no va a ser capaz de afrontar los retos urbanos que se nos vienen encima y por tanto cada vez va a ser más necesaria la inversión privada en condiciones de retorno económico y social, lógicamente económico y financiero para esas inversiones, pero de alto impacto social. Y por tanto yo creo que esto cada vez va a tener que ser más evidente y ahondar más en estas posibilidades.
Oye, pues muchas gracias. You have translation, ¿no, Ricardo? Ah, ok.
Yeah, but I can understand. I'm Italian.
Ah, ok. No, porque quiero ya agradecer a todos los ponentes y hacerle la última pregunta a David, ya que estamos en Barcelona. Véndenos en 30 segundos por qué hemos de seguir invirtiendo en esta ciudad. Explícanos el proyecto del 22 @ que acabáis de lanzar y darnos un signo de optimismo en estos tiempos tan complicados.
Bueno, Barcelona es Barcelona, por tanto no hay más discusión. El proyecto 22 @ que se acaba de aprobar inicialmente en el Ayuntamiento es una actualización del proyecto del año 2000, que es un proyecto de éxito, como sabéis, que actualizado a la fecha de hoy. Es decir, incorpora retos ambientales, hay una puesta en normativa de temas de incremento del verde urbano, del tratamiento del agua, etcétera, y sobre todo una de las cuestiones que es cómo hacer una ciudad más mixta, en el sentido de que se ha aumentado el número de viviendas en el ámbito para que sea una ciudad que viva las 24 horas. Porque si no lo que tendríamos es un espacio terciario que a partir de las 5 o las 6, digamos, carece de vida. Por tanto, nos espera un 22 @ con 1 millón de metros cuadrados, de hecho, todavía por hacer, más mixto, más Barcelona y más propio de la ciudad en la que estamos.
Más Eixample y menos Canary Wharf o la Defense.
Es Eixample, tienes las mismas calles, sí.
Well, thank you very much, Josin, Ricardo, David and Xavier. It's been a pleasure, and we let it to Ellie to close.
Bueno, pues muchísimas gracias. Nos habéis aportado muchos datos, muchas claves de qué hacer dentro de la industria inmobiliaria, cómo está cambiando el sector, qué podemos hacer y qué proyectos hay ahora mismo encima de la mesa. Y esa es un poco la clave de estos paneles en los que se pueden compartir esas distintas visiones, qué se puede hacer desde el sector público, desde el sector privado. Y es lo que estamos haciendo a lo largo del día de hoy en BINVEST Real Estate. Hacemos una pequeña pausa para la publicidad y enseguida volvemos. Ahora hablamos del papel de Europa y ese fundamental acuerdo de los 140.000 millones de euros que se acordaron. Vamos a ver en qué se acaba traduciendo todo esto, pero se lo contamos después de la publicidad. Hasta ahora.